Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today's video is about my wild ride with Microsoft, and I'm going to show you some trades. It is absolutely going to motivate you and inspire you to want to do this. Now look, if you know my history, you know I use great companies like Microsoft to write those weekly covered call cash printing trades that I absolutely love. Why? I love using that time decay of a nice 10 to 5 day trade to pocket that money. And I'm going to show you some recent Microsoft trades that I think you're going to love. And with some recent trades, I think you're going to learn something. Hey, look, before we get going, if you like what we're doing here at the channel, I want you to subscribe to the channel. You see it right there. And hey, look, man, if you like this video today, bang that like button. It lets me know you like what I'm doing. So this video is being done on the night that Amazon announces blowout earnings. And it's probably going to lift the entire stock market by itself tomorrow. Look, Amazon is absolutely killing it. It's going to open up above $100 tomorrow. But look, that's not the only company that's killing it. In fact, Facebook was up 10%. AMD was up like 11%, Chipotle up 27%. Look, this market is absolutely rewarding those that are killing it when it comes to earning. And look, Microsoft is one that I was hoping would get the same love. And I'm going to show you that after tonight's earnings, man, I was feeling like I was holding the bag. Microsoft was down over $2, while Intel's up $3, Amazon's up $100. Man, I feel like I backed the wrong horse. You know what I mean. I'm going to show you my recent ride with Microsoft, and it's going to include a bunch of trades as quick as possible, try to explain why I did the trades, and I hope you learn something. But more importantly, I hope I inspire and motivate you. Get in this strategy. Learn this strategy so it can flow like water, and you too can generate that guaranteed weekly and monthly income. Look, let's get to Microsoft so you can get a peek into my world as to how I'm playing Microsoft and generating that weekly income. Real quick, I use my total cost basis tracker to keep track of all my trades. So I know when I'm playing a stock like Microsoft for multiple trades, where I might actually buy some additional stock to dollar cost average or write multiple cover calls, collect the dividend, I use the cost basis tracker. Look, you have to keep these numbers in front of you. So what I do is I always plug in my numbers, and the cost basis tracker is my #1 spreadsheet I use. I created it and I offer it up for free on my website. All you have to do is go to it and download it. See, I offer those spreadsheets for free so we can keep the numbers in front of us so we always know when we're profitable. Now, looking at my Microsoft trade, you could see I have not only bought shares, I've also dollar cost averaged by buying shares as the stock went down, but I also have written multiple covered calls. And I recently did a cash secured put. Let's go ahead and talk about these so maybe you'll learn something. So as you can see right now, if my shares were to be taken away from me at $96.50, I would have made 7% on this approximate 50-day trade. And you could see that extrapolates out to 51% annually. And I'll take that every single time. Now, since I started writing covered calls on Microsoft, I've actually adjusted my spreadsheet so it takes into account buybacks. I'll explain that here in a minute. Notice with this trade right here, where it looks like I wrote a covered call on 900 shares and only got a 26-cent premium. Really, that was more of a 60-cent premium, and I bought it back. Ultimately, my premium was 26 cents. Because again, I write the covered call, the stock starts to go down. The premium I got paid, let's say 60 cents, is now trading for 40 cents. I then buy it back. Ultimately, I make 20 cents. Now, that doesn't sound like a profitable trade, but when you do that literally the day after you make the trade, I look at it like, hey, I'm putting $234 in my pocket and I'm going to do this that next Friday. So I'm going to do this every single Friday. So when you see me putting on a covered call on April 12th and ultimately picking up just a mere 23 cents in premium, what you need to realize is I probably got paid 60 or 70 cents for that premium. The stock moved lower. The premium that I got paid moved lower. or I ended up buying it back in a very 1 or 2 day window, and then ultimately picking up just 23 cents on 1 or 2 days. You know, $200 in my pocket for a 1 day trade. Look, I'm just looking to pick up crumbs. I'm very active. That's why you see that in my spreadsheet. Since then, I've fixed the spreadsheet where what I'll do is I'll put in the total premium that I get paid, and then I will adjust with a buyback price, which gives me the total take. So looking at some recent trades, I'm going to talk about these two right here. So bringing up a chart, last Wednesday at about 96.50, I was thinking, look, if I can write an at the money 96.50 and get $2 for that trade, that was going to be a very short 8-day window. And I figure, hey, I sell my shares for $96.50. I get a $2 premium. That's $98.50. I'll take that every time. And that's what I did. I wrote that covered call, and look what happened. Microsoft starts to fall off, and I'm thinking, look, this is working out perfect for me. I get a $2 premium I put in my pocket. I'm going to keep Microsoft. And in fact, I'm going to write another covered call next Friday. So I have no fear here. Well, look what happens. It falls down to about 92.50. And I'm thinking, no way it goes lower. So what I did at 92.50, I decided to write a cash secured put at the money, 92.50, for a short 1 week window. And I got $2 for that, hoping that Microsoft would rally higher. And sure enough, as you can see, it has done that. So what do I have working here? I have a covered call at 96.50 for this Friday. Then as the stock falls, I wrote a cash secured put for 92.50 for this Friday. I get $2 on both sides, and now I'm literally playing both sides of the trade. Now Microsoft has earnings tonight, and I'm going to play the time decay and the volatility. I figure, look, if Microsoft blows away the number, they're going to shoot higher. Let me show you that cost basis tracker again and show you what I did that you may not have noticed. I wrote that covered call not on my 900 shares of Microsoft, but 500 shares of Microsoft. See, here was my thinking back when the stock was at 96.50. I figured, look, with this Friday's earnings coming, I don't want to miss the upside surprise. So what I did, I wrote a 96.50 at the money on Microsoft on half of my shares. I pick up the $2 premium, pocketing over $1,000. And I figure, look, if the stock's going to shoot higher, that's all right. Half of my shares are going to be taken away at 96.50, but I'll have 400 shares that are uncovered. I'll be able to write a covered call for next Friday, collecting even more premium. And that's how the trade started. Then the stock fell. And that's when I said, I would love another 100 shares of Microsoft because I'd love 1,000 so I can write 10 contracts. So when the stock fell down to 92.50, I placed a cash secured put. One contract, got paid $2 for it, figuring, hey, if the stock falls below 92.50, I'll get Microsoft at 92.50 with a $2 premium in my pocket. I'll be able to buy back the covered call premium for $2 and pocket that, and we look to make the next successful trade. Well, as you can see, Microsoft actually does a little bit of both. Falls, and then it rallies right in between 96.50 and 92.50. So I'm playing both sides of it, not really sure where we're going with this market, and today I said, hey, I'm going to go ahead and take both of these trades off the books. I end up, just so I could be unobligated going into earnings, because man, I'm feeling good about earnings. I want that full upside surprise, full rally mode. At least that's what I'm hoping for. So what I did was, as Microsoft's heading higher today, because you could see it was up $2, I bought that cash secured put back for $1, tried to get 80 cents, but I paid $1. And then I ended up buying back that covered call for $1. I ended up pocketing the $1 on the top side and the $1 on the bottom side. Now I have no obligations, and now I'm crossing my fingers, right? I'm hoping we go into earnings and Microsoft moves higher. Well, after earnings, Microsoft literally falls $2.50, and I feel like, man, I've made the wrong decision. Well, luckily, with Amazon's mojo heading higher, I think it lifted all the stocks higher, and Microsoft is now rallying an aftermarket over 2%. So here's the deal. Come tomorrow, Microsoft might be +3, and I'm looking to possibly write a next Friday 99 covered call. Look, this is all about having successful trades. And you could see, real quick before I let you go, my original cost basis was $93. I've written all these covered calls, reducing my cost basis. Now, hey, look, before I let you go, see that number right there? Yeah, I've actually exceeded that with these 2 buybacks. I'm going to update that image later. I have over 18,200 for my very first 4 months of the year. Now, why is that significant? I'll tell you why that's significant. That's 18 grand in my pocket with covered call and cash secure put profits. But last year, if you've been watching my channel, you know I made $39,000. That's for the full year. Already this year, in 4 full months, I have made half of that, where last year it took me 6 months. So I'm actually on pace to beat last year's number. And if we keep doing this, I might find myself in a even better spot. With my goal being about 50,000 for this year, I could be looking at a 60,000 number. But hey, look, that's pie in the sky, and I'm just looking to make my next successful trade. If you like this video, bang that like button. And hey, look, until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollars.